Come on, here we go. Joe, come on, yo.
Just saying.
Welcome, y'all, to another episode of the Audio Audacity podcast. I'm your host, Mo B. Today's episode is a very special one because we're joined today by our sponsor, Gia Turner. Of course, I have a nice little speech for you to tell you how it's a seller's market, buyer's market, land, and escrow and stuff like that. But tonight, we're going to talk about all of that, sponsored by Gia Turner. So across from me, we have Gia Turner. Say hello, Gia.
Hello, everybody.
Next to her, we have Debbie Weber.
Hi, everybody.
She's also a realtor. Next to her, we have Texas Homegrown.
Bam, bam, bam.
Next to Texas Homegrown, we got JoJo.
Hi.
That's why I'm going to take him nowhere.
And next to Joe, we got my wife, Boss Lady Brooke.
Hello.
All right, so tonight's episode is episode 13. It's about the real realtors. Right now, we are, let me do an introduction real quick on Gia. Gia is also our sponsor, but she's also, she works for Berkshire Hathaway, and you can reach her at 314-323-1589 or go to www.homesbygiaturner.com. Things she can help you with, investment property, commercial, selling a home, buying a home, short sales, and foreclosures, working with investors, and find a house that you can rent. If you are moving to another state, she can get you a realtor. If you are looking for a career in real estate, she can help you with that. So that's what some things Gia can do. Also, next to her, we have Debbie Weber. Now, I've been knowing Debbie since high school, but I'm not even kiss her ass right now, but she's a damn good person. She's good at what she does. She actually helped me and my wife get our home damn near 3 years ago.
3 years ago is January 29th?
31st.
Okay.
January 31st. Yeah, so
Be expecting that that nice little card in the mail.
yeah, so I'll drink it.
No, not to now. That could be something I
So
could do.
what?
Is for the anniversary.
So
That's a good idea.
and ironically, the reason why Joe feels this way because ironically, Joe, we put the we I forgot about that. Joe and his wife were looking at the same house.
We got it.
And we put the bid on it before they got to. So it's a little.
sorry.
He's a friend. He's also my barber. But when it comes to my house, he's my nemesis because we took
He's
the
like,
house.
I don't even come to. He doesn't even come to your house. He's like, no.
He did once.
I've been there twice. I've been there twice.
Okay.
And it was so funny because I invited him to a thing. He said, "Oh, I know where you stay." I said, "How you know where I stay?" He said, "I know where you stay." And then when we got to the house, he told me how he knew where we stayed. I said, okay.
It happens.
It happens. So
It does. I'm glad that
Did you
y'all
find a
there.
house?
What are the
Oh yeah,
odds?
absolutely, absolutely.
That I know that. What are the odds on that?
What are the odds that my barber
I
was
seen
gonna-
that house was like, I want this one.
Oh
How
no,
about
we jumped
that?
on that quick, fast.
Yes, we did.
And to
If I
hurry.
If I remember correctly, you did that like you and Tom. Y'all got it together like really quick.
Really quick. I mean, I think we even
we-
saw it the first
you-
day or
yeah.
within the 24
'Cause you
hours.
were
that
the
it had.
first day because we had that was like the second house we saw of the 5 you showed us, and
Yeah.
she was like, "That's the one I want."
This one.
That was it.
Like,
So
this is enough room.
Right now, though, it's not that easy, but it was easy for you guys.
and we're gonna definitely go into that.
Pre-COVID.
Now we did an intro real quick about Gia, so we're gonna do a real quick intro with Debbie. Debbie has a long list of things that she's accomplished. I will be remiss to not show everyone. Hey,
show
Justin, do a close up on the thing, man. She has a long bio. That means she's well versed in the things she does. But let me just say, she's celebrating now 10 years in real estate. 10 years, y'all. 10 years. So that's a definitely.
This gets in your obituary.
That's a definitely.
Easy condensed.
That's a good thing. Also, she's an ALC member within Keller Williams, and from 2021 to present, a Social Equity and Inclusion Chair from 2021 to present, Missouri Realtor Board Director. Man,
I just got that this year.
oh, look at that. See, let's see. WCR Women's Council of Realtors, co-director of events at 2022. Kids in the Middle, full board member from 2016 to present, and the recent winner of the 2022 5-Star Professional Award.
Yes, sir. I've been waiting to get that award.
So when you get stuff like that going on, that just goes hand in hand for me to play this. Because the price is right, goddamn. She can set her prices. She can set her prices. So it's not only is she my realtor, she's a friend, and it's good to have her on board. So thank you for taking time out of your evening, both of you guys, for coming out tonight. So now that we got the intros out of the way, we're gonna get down to the get down. All right, so now I got some questions right here that I'm gonna ask both of y'all. So I'm gonna ask, we can go do a little round table discussion with asking you first and vice versa, and switching it up. Okay, so let's go with the let's go with this one. Right now, how is the market? Now, and I want the brutal truth. Is it a seller's market? Is it a buyer's market? Let's go with you first, Gia.
It's still a seller's market. I'm sorry. It's still pretty much a seller's market. Things are changing a little bit for buyers, so you can kind of ask for some things now, but not too much.
What say you, Debbie?
Oh, absolutely. Definitely depending on where you are in the St. Louis County or area. The different areas a little bit better than others, but I'll tell you, even based on the numbers that I read, even just this past week, Florissant has less than a month of inventory. So Florissant proper. So what is considered Florissant has less than 30 days of inventory. So if no new houses went on the market, in 30 days, all the houses in Florissant would be gone.
Wow.
So that right there, that tells you about the seller's market. Okay. That it, usually a buyer's market is about 3 months of inventory or more. Okay. Anything else is a seller's market, and we've been gradually just going down and down to where literally even as of January, we're at 30 days.
Wow.
So great time, very good time to put your house on the market because you're going to get what you want.
Okay.
And please have somewhere to go.
Right. Yes, you have to have a backup plan because you may not find something right away.
Damn. So it is. So basically, what you're saying, it is still a good time to buy right now.
Yes, it is. It's just when you ask about the market, it's just still a better seller's market than buyers.
So it's easier to sell than it is to buy.
Yes.
Yes. Well, before you were able to, I think when I helped you guys buy your house, we got some concessions. I think we got homeowner's warranty and some things like that. You guys got, were you guys getting a VA? No, you guys weren't a VA, but a conventional, we did the kind of loans. Most of the time, if you're not conventional loan or cash, they don't even want to talk to you. So now what we're trying to do now is find those alternative mortgages and things to be able to make people's contracts look better if they don't have $250,000 in cash to put down on the house. And I've seen it happen multiple times.
Right.
And people wonder why conventional over FHA, because FHA have a lot of rules. So you can't just, like when people were waiving appraisals, they like, well, how can you do that? See, FHA won't let you do that. They're not gonna let you buy a crappy house. They're not. We're not gonna give you I'm not gonna give you $300,000, and then you buy this crap.
Because it's a
conventional don't care.
Yeah.
They don't have no rules. You ain't gotta get no appraisal. You ain't gotta get no inspection. They like, look, I gave it to you, but you gonna give it back to us. I don't care what you buy. So
that's how a lot of the buyers feel right now.
So that's why people would choose a conventional. Like they wouldn't look at VA, they won't look at FHA. Cash was normally key,
right?
And then conventional.
And if you don't know, if the listeners don't know what those different financing options are, FHA is usually your first time home buyer type of loan that you can put 3.5% down, which is pretty much the least amount that you can do. But it does have it. They make you jump through a lot of hoops, not only with the house when you sell it, but you as the actual buyer. They are looking at you with a colonic. They're giving you microscopic looking through your finances and stuff like that. The conventional loan, again, a little bit different. You're usually putting 5, 10, 15, or 20% down, or even more. So the banks, everybody looks at it a little bit differently. And with a conventional loan, there's not so many predications on the property. So you could buy a house that doesn't have any kitchen, right? And they'll give you a loan for it, that kind of thing.
Right.
VA, of course, that is your veterans loans. Those are usually 100% financing, and it really makes me mad because some people have gone with other loans. You're not going to give a loan to the people that have given you freedom that you are They have helped you be able to do what you want, and you don't want to go with a VA loan.
Crazy.
Because of more restrictions. They
But
have
they-
their own inspection. So you get an inspection, then VA come do their own
Yep.
thing. Like, oh, no, we're not doing that.
But
You know.
but it's great for the buyer because it's 100% financing, and then of course, like she said, cash is king. So it's just it's tough, but you just have to have a good strong agent that knows how to kind of meander through some of that, so that while you guys we went and looked at a house, 5 houses, and that was it. We're talking maybe 2, maybe 3 months, if not longer, to find a house.
Wow.
Yeah.
Not really to find it, but to get it accepted.
Yeah, to get accepted
in
yeah.
there.
Oh, I did my homework prior. I was, on websites and pulling houses and, looking at this versus this, and then it, just make you a little short list of what it is you want, or the location you want to live, or what you want out of your home, because that's gonna be your home. This is not an apartment anymore.
Right.
You just got to look at the different things that you want in your home, and it was easy for me because 2 years prior to us even getting the house,
You guys were looking.
I was doing
the
already
research
doing
and doing the.
So when it came time, like, oh, these 3, and then maybe that one. I think that one house we saw, we both was like,
We walked in and we
I
walked
walked
right
right
back
back
out.
out. It was the kitchen, and it was like a window or something
I remember
in the
that house.
middle
It
of
was
the.
not- yeah, it
I
was-
was like, oh, this ain't us.
Yeah.
This is never.
So you knew what you wanted.
Yeah,
basically.
I did.
Yeah.
I did. I knew we'd be empty nesters by the time we did make a move, because everybody had moved, the children or whatever. So that came into play. I would love to have a big 7-bedroom home with 5 bathrooms.
But
Right.
Right,
Don't
but
get
do
me
we
wrong.
need it right
It's
now?
unrealistic.
I barely clean the one we got.
Right.
I'm just
And then they come back.
Like, it's-
you don't want them to come back.
Yeah,
the
we got-
grandkids can come back,
we got
but not
enough
or
room
come, but
if they
not
do.
everybody else.
Everybody be in the
Right.
basement, but we got enough room.
Right.
A couple of rooms in the basement, to build up.
And that's another mistake some people make. They not like you can't take your time with this. Not in this market.
No,
You go
I
in the
don't.
house and this is what you want. You got to be ready to pull the trigger.
You cannot
can't
tell
think
me.
about it.
Yeah.
You can't tell me that you need to pray on it. You cannot.
praying
Is that
before
what
you
yeah.
get there.
Yeah. Were you praying on it?
Yeah.
I'm
Well,
sorry.
It ain't working.
Sometimes
like
the answer's no.
A lot of times when I tell people, I'm like, well, you know what, we're going to pray right now.
Let's
because obviously God put this in your path, have me to help you get this. Now let's pray right now and let's move on it, because
Yeah.
you snooze, you absolutely will lose.
Absolutely.
surprised
Because
it
when I
was-
went to look at that house, it was another, like, 2 guys. They were looking at it too. You know what I'm saying? And we walking around, and I'm looking at them like, okay, y'all can go ahead and leave. I'm gonna get this house. Right.
They was in my house.
Oh yeah, absolutely. All in your kitchen.
With their shoes on.
Yeah, with their shoes
They
on.
ain't take their shoes off.
No, they take
Didn't
their
they have
shoes
new
off.
carpets in there?
It did.
Yeah, absolutely.
They're
Thinking
supposed
about
to
it,
take their shoes off when they walked
and
around.
put the booties, the blue booties that was at the front door.
Go ahead, Joe. Go.
He have it. Just let him.
He's having.
He's having a
I want
moment.
to hear this.
we talking.
No, I mean, I was looking. I was like, damn. I said, this is nice. And then I went to the yard because that's what I was on. The backyard is wonderful. Yeah, hell with y'all, man. All right. Anyway,
We're gonna put a Chick-fil-A in the backyard.
Here's something else to tell you. If they decided, I've run comps in that neighborhood as of today, this year. I ain't gonna put your business out on how much you bought the house for, but probably 40, maybe 50,000 that you could get
more.
over
Yeah,
that
absolutely.
right now if you sold that house right now.
You know what? Ironically, I know that to be true because my next door neighbor, Todd, Todd, he just moved. Hazel Central 91 graduate,
Okay.
and Todd sold that house for 30. I want to say maybe 35,000
Yeah.
over what
Over
he
what-
asked.
Right.
And there was a bidding war. People they were
Right.
just it was getting higher and higher and higher just to get that house.
So that's the unfortunate what happens with the seller's market. We got to be careful because people are thinking that, okay, it's going to do like it did in 2006, 7, 8, when we had that crazy seller's market and people were, overbidding. They're paying all this money for these properties. The thing about it that's different now is that the lenders aren't in cahoots with the appraisers anymore. When one of the stipulations when they changed and revamped the whole lending industry because of that, one of the things is that when we get an appraisal when it's time to do it, it's a round robin. The lenders don't know who is going to actually get the appraisal because that's what they were doing. That was part of it. I'm really passionate about I wasn't in real estate at that point, but my ex-husband was. And I remember buying our house. And I'm like, well, don't you need my check stubs? Don't you need this? Don't you need that? And he goes, no, we're at a like 740 credit score, stated income. What the hell is stated income? Stated income was literally, you just tell them your credit score was good. Oh, your credit score is great. Well, how much you make? Oh, I make $50,000. Or I make $100,000.
And they would
And
just
they
go
just go,
by that
okay.
because you stated it.
Yes.
Not because there was no verification.
It was crazy. And I really, I'm passionate about, especially North County, because no one can tell me that North County was not the hardest hit area with the predatory lending, with the downfall of the market. So many houses, so many people in all these neighborhoods lost their homes, and the value. 30% loss.
Including us, our old home. We bought a house in Bellefonte Neighbors.
Right.
And we had a 80-20 mortgage, ballooned like a motherfucker. We were paying, with everything combined together, we were paying like 8 something. Then all of a sudden,
That adjustable
6
rate.
months into us living there, it jumped up to like $1,400.
Yeah, like literally, like
Literally.
That adjustable rate mortgage.
Yeah.
And
Oh, you had
so many people,
Yeah,
right?
yeah.
So many people lost their homes and stuff. So you understand when it comes to when people are buying houses now, especially our people, how they can be very leery and skittish about, because some of them went through this, and if maybe they still were in their house, they lost so much value.
Right.
So I know one of the things that kind of can segue, one of the things that I had mentioned on our little thing there is a lot of people are wondering, are they paying or overpaying for houses?
Right.
And the actual the answer is no. The answer is no, and here's why. Because chronologically, the real estate market has been an increase of 4% throughout, once they really started looking at that data. So most homes, if you look at a chart of like from the 1970s, I think that's when they started really paying attention to it. 4% is usually the gradual increase of property value over a period of time, and that's pretty much been the same. Now, 2002, 3, 4, 5, you started seeing that go up crazy, 15, 20%. Of course, the market couldn't sustain that, and of course there was all these bad loans. People were getting too much home for what they should, and then they plummeted 20-30%. So right now we're back up to where that curve would be if we'd have stayed on the trajectory of 4%. So a lot of people are like, well, I put my house on the market for $150 and I got a $200,000 offer. Oh wow, I'm paying too much. No, that's where the value should have been had we not had that downfall. Okay. So we're finally, and that's just all across the board. Especially, but it's so great to see it in North County, because to see so many foreclosures and all of that in the North County area. I'm sporting my Hazelwood Central. Gotta rep them Hawks.
Yeah.
I love my North County.
Yeah.
Hawks for life. That's right. So anyway.
So
you'll get me started on that.
Lord, don't mind this comment in that Spartan over there. No, don't.
Well, he Hazelwood, so we're still family.
Cousins.
We cousins.
Yeah, we cousins.
Them cousins that I know. Them play cousins. We get in a fight if we need.
Yeah, they still though.
you got something basic.
Wow.
Mind blown.
Place today, boy.
So, true or false? Is it now the time to wait for a foreclosure property?
No. You want to answer that too? You want to answer that, or?
It's the whole waiting word. That's what I mean.
Well, take it more on a logical approach. If you look at the fact that everybody's home is increased in value. So for the people that went through the pandemic, that got those, what did they call them, that they were able to stop their payments, or
Those forbearances.
Forbearances
Yeah,
and stuff like
right
that.
now. Yeah.
People have lost their jobs or things like that. I think they said at one point in time there was like 15 million people that were not paying their mortgage payment. It's now down to like 5 million. Now that's 5 million United States. It's not 5 million like in a couple of regions. It's entire, and that's nothing. That's a drop in the bucket. So you put that, you've got only 5 million people that are maybe behind in their payments. The values are there. Unless your house is a crack house or a meth lab, even investors are paying top dollar for investment property because they don't have any, these people that flip, they don't have anything to buy either. And I know it's low inventory for everybody. So even if a person, if anybody's listening to this that has been in forbearance or have gotten those quote unquote foreclosure letters, you can still probably get out and sell your house and sell it for more than what you owe, so you'd actually have some change in your pocket.
Now, I have a question about forbearance because currently, because of the COVID and the situation in our home, we're on a forbearance program, COVID forbearance. How long are we allowed to be in that, and how does that affect us in terms of being homeowners?
That is a good question. That's one I don't know.
Okay, we'll Google it. It's all good.
Yeah, that I would
They
assume.
don't tell you so is this like a government thing or was it with your mortgage company?
Well, what we did was we did a refinance, and after the refinance, we went ahead and got everything situated, and then, of course, with COVID being the way it is, and our work hours, because we work in the same location, hours were cut. You know, my wife has disability, whatever, and so the mortgage payment dropped down a little bit, but it still
was a little bit okay. So then so the forbearance you guys haven't been paying, and are they putting it on the back end?
I don't know. I need to make the phone calls, but
That's
what
what
I
you need
do
to
is
find out.
I send in $600 a month. I still give them
So he's
something.
still paying on
Yeah, I'm still getting
Right.
because they told me that I don't have to pay anything, but I'm not doing that.
Right.
No,
Yeah.
I'm not. No, I will not do that. So I still
You just don't know. I mean, you think the government's
your
trying to
ass
help
back.
you, but then in the minute, like, oh yeah,
COVID
you
is
owe
still
$20,000.
Right.
So
But usually the forbearance, from what
Covers
I've known about forbearance, they usually then will put it on the back end of your loan.
Okay.
If it's a true forbearance.
Right.
But COVID changed everything. So, but more than likely that's what it is. It's probably going to go on the back end. So in 2055, when you
Right.
when you the 30 years,
Yeah, so your 30 years now 36 years now.
right.
Okay.
But what you're doing is because they may be, if they've stopped it, they might be putting that just towards your principal versus the interest on there. So that it actually might work out for you.
Okay.
Because and I think I told you guys that at the closing table. Play one extra house payment a year,
And
you will knock down 5 to 7 years off of your loan, and that's big.
Right.
huge.
Especially when you saw that amortization schedule. You look at how much money you would spend. It's like,
Wow. Right.
It's discouraging. You like
right.
give you
I tell people just tell people just skip it. Don't. If you want to be up at night like a scary movie, just go ahead and read through that. Otherwise, don't even look at
say
it.
you told us that, like, you know what, we're not gonna look at that right
No.
now.
Right.
We're gonna do this.
Right.
How'd you when you signed your documents? Were you looking at them?
Look at Joe. Cheeks turning
It's hard.
red.
It's hard to look. It's hard to read.
Yeah.
But did your lender or did your agent tell you to do that though, to make sure?
He said,
Same
it's
deal.
good. Yeah, absolutely.
What's really good is if you do it on if you pay it like bi-weekly, like with your pay portion of your mortgage, like how you get paid. So if your mortgage is $1,200, I'm just saying.
Oh,
Okay. I don't know what it is. I'm just saying. Your mortgage is $1,200.
Yeah, I know what you mean.
Then when you get paid, just make it a six. Have it deducted already out, and you're automatically going to make that extra
Right.
payment because of the extra. You have like
and
two or
get
three.
two principal payments on
Right.
it versus
You already have two extra. Two extra payments of for the payroll, just right there.
Right. Oh,
And then when you get
goodness.
5 pay periods, one squeeze some extra ones in there.
Right. Just pay it as quickly as
It's
you
going to
can.
be pretty interesting with COVID still doing what it's doing. Like what I read about it, what you were asking, it's going to be on a float, and what that means is until we see what happens. But that is so open ended.
Right.
Yeah, because they keep changing the rules. They
They
really
keep
don't know.
changing,
Yeah,
and
they
it's
don't know
like
what
They don't
they're
really
talking
know
about.
what
Right.
we
they
have
don't know
7
what's gonna
more.
happen.
I want to say 7 more variants that's due to hit between now and 2030.
Your
Like,
arm gonna look like
yeah.
the months over here. You're gonna have 50 shots.
Not if you stay home.
Right.
I missed the whole COVID
But
thing.
the main thing about the bankruptcy, though, the foreclosures is everybody's looking for a deal. There are no
no
deals.
deals.
There are no deals out there unless you know your dad decides to sell to her mom because you guys are friends. Hey, I need a house.
got an
Okay.
inside.
You got an inside job. That's it.
Yeah, you got the
There's
inside
no
hookup.
deals.
You ain't gotta. Yeah.
You are paying full price.
Yeah.
Okay, so let's switch up a little bit. Let's inform our listeners and our viewers right now on what is the process and the steps to buying a home. Well, the first thing we have right here is credit. That's So
Yes.
the first question with credit is, what score do I need to buy a home?
What type of home?
There's always questions. You're right. Are you looking for a single family?
You can get a bungalow
Left
down.
house, crack house.
Yeah, single ranch
Single family
style.
condo, but typically for a FHA loan, most lenders want you to be at 620 or better. There are some lenders out there that go as low as 585, but it just depends on that mortgage company. So there are some. Now you can have and for those they see your score is low, but you don't have any disparaging credit, like a lot of collections and all that other stuff. You just have a lower score. So some of those mortgage companies, depending on what, you have to do some research or have a great agent that knows that works with a lot of different lenders. Yeah, but 585, absolute. But I wouldn't do it. If you 585, I'd say
Don't
wait.
do it.
No, I'd say wait.
Let's
Build
fix
your
it.
credit.
Wait
See
and
what's
build your
wrong
credit.
with
Credit.
it. Because you'll
as best
get
you
more
can.
house. Your interest rate will be lower. You'll get more house for the same. They won't. You can get spend more money.
More space.
Right.
So
Because you got a
620.
lower
so
interest rate,
620 is the nice solid number.
That
Yeah,
you
but-
can get it. You can get an FHA loan
But
for
we
620.
But
But,
higher the better.
preferably higher.
yeah, at least
Preferably
640.
640. Right.
At least 640.
Okay.
I remember you called her and told her what your credit score was. She's like, you know what? Let me run your numbers and see what I can do. And I was like, okay, that's all she got to do. And you told her a couple of things. Okay, I'm gonna call you back tomorrow afternoon.
I remember that.
I'm gonna call you back.
Yeah.
And you did. It was just
Right.
like that quick. Know what you're going into it with. I guess is what I'm trying to
Right.
say. Get your
And
numbers
don't be
together. your
afraid
credit.
to find
Ouch.
out.
Because you
So
might
many
be working
people
with somebody.
don't want to know what their credit score
That's,
is.
I don't know why that's
scared.
scary.
They're scared to hear it. They're scared of rejection. But
Because they
the,
know
Why
it's
is that
bad.
scary?
Don't
the
be
sooner,
scared.
the
Don't be
You
sooner
can
you
fix
know.
credit. You can fix
I don't know why
credit.
that's
It
so
is not a death sentence.
Like mine is 2, but I married him, so it was better credit than Brooks.
I ain't even never heard of
I was
two.
a stagnant. I think I was a 2.
So you
Then
said
I married
24 was
Brooks.
bad then, huh?
Yeah, I'm like, you know what? We're just gonna roll with this one.
Well, 2 plus what? Okay.
Yeah, hey, I'm
700, 720.
Like collectively.
No, 725 right now.
720.
Well, 727 with her. 'Cause she want to do her
Right,
share.
add them two. Add them two.
Feel me?
One, two. Now, how can you improve your score if it is low?
Pay your
Credit
shit.
counseling.
Okay.
Oh.
First of all, get your credit. Your credit
Pay
report.
your
Go
stuff.
and don't go to Credit Karma. Go to an actual lender
yeah.
to have them pull your credit.
Get your
Credit
credit.
Karma is full of
Shit.
malarkey.
Yeah.
Okay, I
I'll
wasn't
say
gonna
it for you.
Boo boo, shit, dookie,
This nigga
Put a
said-
button.
said-
fuck boy, fuck
She said
fuckery,
malarkey. I
fuckery.
I
like
think
it.
I've heard that since Cincinnati.
The thing is, they Credit Karma only looks at one score.
Really?
They only look at one score, and I think it's the TransUnion.
Okay.
Possibly. Don't hold me to that, everybody, but I know it's only one score they look at.
Okay.
And when the lenders, they're obviously looking at all three. And even how the lenders pull credit is different than how, like, if you're going to get a car. It's all different.
Yep.
Yeah.
Have a lender pull your credit. It's not going to kill you.
Okay.
And most of the lenders that do it, they will coach you
Yeah.
Tell you what to do.
exactly what to do.
And
Hey,
some of 'em
pay
work
off
with you.
this,
Yeah.
this, and this. Oh, this looks like this might be disparaging. You might be able to just write the credit people and get that off of you. Which also reminds me, please do not pay a company that says that you're gonna pay them $500-$600 and
Clean
they're
your
gonna
credit.
clean up
Clean
your
your
credit.
credit.
Because what they do, and I had a young lady that just did this, and
Take your money.
they take it. Yeah, they do clear it. What they do is, it is your debt. It is your debt. What they say is, oh, can you produce, something for it? And if they can't, then they have to take it off of your credit for like 30 days, and then that collection is
got
going to
that-
sell it to another collection, and then it's going to come right,
Right
back
back.
up.
Yeah.
And I
They're
had a
hoping
lady.
that they don't respond, because if you don't get a response in 30 days, they automatically have to take it off because you didn't give me an answer.
Right.
So they hoping that it just falls in between the
I
cracks.
I know he was office manager that worked at an apartment complex. I was doing that to get people into the apartment complex, and you had that small window of like 28 to 30 days. I'm gonna do this. You get your stuff, move in, sign this, and I'm like, okay, cool. And I did. I got in that little window, but come to find out, they shut all that down when
Right.
they found out what he was doing to get those people in there, and then half the people wasn't even paying once they got in,
Right.
overdue and all that. But yeah, they shut all that down.
The main thing is just if you talk to a lender, they're gonna steer you the right way.
Oh
Yeah.
yeah.
And if they feel like you need something extra, they'll tell you that. But most of it, you can do it yourself. You didn't mess up your credit in a day. You messed it up over time. So it's
So it's
going to
gonna
take
take time.
patience and time. And if you are serious about getting a house, fixing the credit, you'll do the work.
Yep.
That's it.
Because COVID messed a lot of people up. Like, you shouldn't be ashamed of whatever happened.
Right.
Everybody went through something.
Right.
Yep.
I mean, I guess it's like
I mean, it's just what we. I mean,
if you
absolutely.
if you don't go get tested for COVID, you won't test positive.
But that's right. That's the mind.
And then it's it is the same theory.
That is
You're
exactly
not gonna
the
know
same
what your
thing.
credit score is if you never check.
Right.
April going deep today.
Yeah, you know what?
That is exactly what it is.
I'm the only one not drinking Angry Orchard, so I'm on point. Oh, good. It's not good. That's why you so angry.
I know. Come on. Bring my damn water.
Put your water.
Shut up, April. Shut up.
Still get half.
If you don't
Are there any
test, you
programs to
won't be
help
positive.
with buying a home, and how do you qualify?
I refuse to test.
you have to go through the lender. It's programs out there, and they have credit qualifications and income. How many people in your family, and they will pay closing costs and down payment.
Okay.
There's some rules in there, but a lender can tell you which one that you qualify for.
Okay.
That's why it's always good, again, to different lenders. Your agent should. I work with like 4 or 5 different lenders, and it just depends on where my people are financially, what their financial thermostat is. There, I know who I'm going to send that to. So yeah, there's down payment assistance programs like through Beyond Housing and. What is that? So Beyond Housing takes care of the county and St. Charles.
Okay.
Then there's another one, and I'm sorry, there's another one that's like Beyond Housing that deals with St. Louis City.
I didn't even bring it.
Yeah, there's a specific one. So it depends on where you are. If you qualify, usually you have to have a 620 credit score. Debt to income ratio can't be higher than 47%. And you can, if you want me to go into more of that.
You are answering all the questions that my brother is going to call you about.
Okay, good. Debt to income
'Cause
ratio.
I gave him all your info, like call her.
Right.
Like, she'll explain it.
And then they're going to, and with Beyond Housing, and here's very, very important people out there listening. If you make more than $67,000 a year, you're not going to qualify for down payment assistance.
Okay.
I had a young lady, and
Or food stamps.
no, you can't get that. Yeah,
That's just how the government.
that's
do
just
it.
how they roll. That's just how they roll. It's unfortunate because I had a couple of people where, single person, her credit was pretty good. It was, she was in the very high 600s. She never bought a house before, but she was a single person and she made $68,000. She didn't have any like dependents. So the more kids you have, hey, that actually helps.
Yeah, it helps 'cause you got
It
more
helps
people
if
in
you
the
have more
household.
people in the household. But it was just her, and she didn't qualify for down payment assistance, and she was pretty upset with that because she was like, "Well, what's the point?" She was like, "Well, what's the point?" And I'm just like, "Well, technically, it's just you. I know I'm not in your pockets,
Right.
but it does happen.
They figure you don't need no help.
That you don't need no help. But I know
the
that
main
that's
ones who
not
need
always the
help.
case. But what I was able to, I got her with a good lender that, and I think we were able to get some closing costs, cut out that. You're pulling money out of your 401k.
Right.
I think you're okay.
Yeah. You good.
So,
You good.
not I don't want to be in everybody's pocket, but
Right.
there are some people there that really, really need down
Right.
payment assistance.
Yeah.
What's the score?
Is it over?
Oh,
No.
21-20. Oh, wow. That's a good game. That's a good game. He's watching football.
Yeah, I mean, whatever.
Right, like,
Packers lost, so
yeah, go Cowboys.
Let's see. The pre-approval process. How do you find a lender?
If you with you can start with your
phone
own
back.
bank. Somebody that you've been banking with for years. You do all your business with.
Yeah.
You can start with them.
Yeah. Don't always say to use your bank when it actually comes time. Banks can sometimes be a little more intrusive, and they don't always have the programs that some of the independent mortgage companies have.
Okay.
But yeah, you could start with you part of First Community Credit Union. Go in there and talk to someone. Have them they'll take a look at it and see where you are. Then go ahead and shop it around.
Okay.
Normally, your realtor have
Has
info.
people that
or
you
have
can,
people that you can do. And like I said, I have people that, like currently Regions Bank, I met up with him about 2 years ago. Throw out a shout out to Matt Holly because he's been a bomb lender. He's been able to make miracles happen. And one of the great things about his program at Regions Bank is Regions keeps all of their loans in-house. So they don't sell them like normally if you do an FHA or conventional loan, normally they do it and they sell them off to U.S. Bank, Wells Fargo. You get those kind of 2 months you paid one person and the next moment you got this big old,
I didn't get that far.
a big ass packet from, Bank of America that's where you're sending your thing to. With Regions, they're very community oriented.
Right.
So they have a program out there. If you have a 640 or better credit score, so let's say 640 to 679, they have a 3% down, 3% or 97% loan. So you're only putting 3% down, but they don't. You don't have to pay any of that mortgage insurance premiums.
Wow.
That's on there,
Yeah,
that's big because that allows you to buy more house because your house payment can be a little bit different.
Okay.
And if you're 680 or above, it's 100% financing.
Wow.
It's a conventional loan too. So if you're competing between, some of these loans, FHA or whatever, you can go conventional and stuff like that. So really, you just need to, you can go through your bank first, but sometimes if you get connected with or referred to a great real estate agent, they'll know where to put you.
Okay.
And PMI, in case somebody don't know.
Oh, yeah, they probably don't. Yep, go ahead.
PMI is normally something you pay when you don't put 20% down on your home.
Yes. And what they started doing
I don't know
after
where
the
money
fall.
goes.
Yeah, it's supposed to
the
be like
purpose
their
of it.
insurance. So if PMI is taken care of, it's protecting the lenders now from bad loans. So again, thank the people 2007, 8, 9, 10, whatever. That was a government mandated thing from high up that you have to, if you're not putting 20% down, you have to have mortgage insurance. Okay. So that if at some point in time, if you default on your loan, the lenders have an insurance policy basically to pay off that loan. Okay. That way they're not losing money, which is what ended up happening with the fall of the real estate industry.
Okay.
So it's not insurance for you.
No, it is not.
I was asked that. Oh, so if I don't pay my mortgage, they're going to pay it for me?
Hell no.
Ain't nothing convenient.
You're
It's
gonna
not
lose
gap
your house.
insurance. It's not gap insurance.
Right. You're gonna lose your house, but they're gonna get all their money
Right.
back.
And the house.
Okay.
Yeah.
Real quick, Joe,
yeah.
Texas, or Boss? Y'all have any questions, comments for the ladies right here?
Boy, I've been running my mouth. Anybody else?
So that's a no. That's a no. And
And again, my brother is gonna call you. He has some
okay.
questions about VA loan.
I will take care of him.
Cause he asked me like I would know, and I was like, sir.
okay, so let's see. For the pre-approval, what do I need for the process? And a closing cost. What is a closing cost? So what's it's a two-part
Wait,
question.
You take one, I'll take one.
For pre-approval. So you need check stubs. Pre-approval is kind of like the short. It's not a really deep pull of your credit. They just kind of saying, "Oh, we just." It's not deep.
You
deep.
look
So
right.
they
You
not-
look good so far.
You look right. You just look good on the surface.
They're gonna pull your credit.
Right.
Right.
So once you get a pre-approval, that's just really saying that you can go and
And
look
look
for
at
a
a
home.
house. Pre-qualifications.
Right,
sometimes is what they
because
call
you
it.
can't put a bid on a home if you don't have this.
Ah.
If you don't have a pre-qualification, you cannot put a bid on a home because nobody want to take their home off the market for somebody who
Can't.
think
Yeah.
they can get
afford.
something when you got 50 other people.
That's already.
can't.
Right, right.
Yeah.
So you already you're not even in the game without a pre-approval.
Again, thank for everybody. I'm always going back. Thank everybody in 2006, 7, 8, 9 that were getting homes, and that was a problem where they get to the loan commitment time frame and they really couldn't buy the house, so it was a waste of time and money for everybody. But usually, they're probably usually pulling 2 to 3 months of your paycheck stubs.
Oh, you know
You
what? I do
must
have
do
a
your
question.
taxes.
I do have a question.
Okay.
When it comes to couples, are you pulling both their credit? Are you pulling the higher credit and using that? Like people
Who
have
wanna
asked
be
me
on
that
the
before.
loan?
Who
You
depends
know,
on
you
who.
know where I'm at with it.
I'm saying if you just want to get it in, because people, married couples do just get it in the
One
husband's
person's
name and they
name.
just get the pre-approval based off one income.
Yeah.
Instead of two, because of course two.
Oh yeah, you can. That went from 300,000 to 600,000. But
Yeah.
then what if?
But
and
can you do you want to pay that? Though?
Right.
No, I'm good.
Right.
I don't want to pay none of
So yeah, you can definitely get a loan in one person's
in just
name
one
as a
person's
married
name.
couple.
When you get married, when you're married, because Missouri is a marital state, that even if it's like Mario, when you guys bought your house, the loan was in your name, but you signed some of the documents as well as the title, because as a married couple, you have to take it together, unless you do a marital waiver, which you're going to waive your rights to that property. Most of the time, you don't see that
I ain't
until
waiving nothing.
right. You don't see that a lot, but you could. You know, if I've had people that said, "Well, we're buying." He's buying this house, but if something were to happen, I don't want any part of it, so I will sign a marital waiver. I think they was already on the verge about to divorce anyway.
Look at them sideways,
So I think,
like,
right? You want a marital waiver?
I think y'all need counseling.
What was the rest of the question?
The other one is closing costs. What is
Closing
it?
costs.
Yeah.
So closing costs, people don't understand that there's two types of cost when you're buying a house. There's down payment and closing costs. The down payment is whatever you were approved for during your loan. So if that's 3.5%, if it's 5%, if it's 20%, that's just you putting down to buy the home. The closing costs are what you need in order to facilitate the deal. So that can include title services fees, which is what you want to have a company, reputable title company running your title. They're going to check to make sure that you get clear and free title from the present seller. They're also going to check you and your credit, not your credit, but your social security number, to make sure you don't have any liens or judgments against you. Because you cannot buy a house if you have $20,000 in unpaid child support. Will not happen. I have seen it happen. Wow. So that's one of the things that they'll look at. A lot of people don't know or realize that you have to pay 1 year of insurance up front.
Yep.
So your insurance and your taxes are mixed into the mortgage payment that you have. You'll pay principal of interest, taxes, and insurance. However, they're collecting that basically for next year. So you got to pay whatever that insurance is so that you're covered for insurance for the first year. Any fees that maybe your loan officer or the mortgage company might have, there may be some extra fees, probably could be between $1,000 and $3,500. Just depends what your lender has. And then of course, if there's anything from your real estate agent, like transaction fees or stuff like that. On average, I'd say around a $200,000 property, you're probably looking at around $5,500 to $6,000 in closing costs. So if you're putting 10% down, that's $20,000, and then you got to have another $6,000 or something, for that.
Okay. So also when it comes down to it, when you're making an offer, what is the process?
Ooh, prayer.
Right.
Start with that again.
Right now.
Jesus.
So now you gotta
God,
really be
Jesus.
ready to. You gotta be a little strong, because it's intimidating if you looking at a house, and before you put your bid, it's already 20 other bids.
Yeah.
So do you still want to bid on this home? Are you ready to fight?
Right.
No.
Well, it just depends on the house. Some people say
some
no.
people would.
Some people, if they see it and that's their house, they see their future kids, grandkids getting married, whatever, then you're gonna do what you have to do.
I don't know
But
why
to
I
fight,
never thought about that though.
you need to have
Yeah.
a little.
Yeah,
Cause
we
they
gonna
coming
roll
in hard.
liquid assets.
Well, the thing of it is when we say fight, we have to. This is because it's a seller's market. Sellers know what they have, and they know that if they don't accept yours, well, there might be 5 to 10 more behind you. So, in presenting an offer nowadays, you have to really make it really pretty for the seller. So, here in St. Louis, the actual contract for that you write up for an actual real estate transaction is very buyer friendly, extremely buyer friendly. You got like 5 ways to get out.
Yep.
You got inspection, you got a title, you got appraisal, you got loan commitment. Hey, there's even an insurance contingency.
Yep.
So like for some of those people that like buy a huge house down in the city, most insurance, home insurance usually runs you $1,200, maybe to $1,500. But on an all brick 3-story house down in Central West End, it's probably gonna be $2,500 a year. That could take you out of your debt to income ratio. That could take you into another space. So with all of that, there's the contracts are very buyer friendly. When you're in a seller's market as we are, you have to make that buyer friendly contract less buyer friendly. A little bit less for it. So before, just like, and I can just make the example of when I did your loan. We got home warranty. We got closing. What was it? Like $5,000 in closing cost credit. And
Wooden blinds. Remember he asked for that?
The wooden blind and the sconces.
Yep, that's right. You know, we were able.
You remember? Okay. He remember. Remember?
But
Window treatments.
yeah, it was very nice.
He asked for all of that.
I'm sorry.
No, go ahead.
So if you look at it from a seller's, if you just flip it. So if you got 3 offers sitting here, you need closing costs, you need this, you want this. Okay, cool. You got all these stipulations, and then you get to these, and then you're like,
That don't bother me.
I want no inspection. No, I don't need
that.
I don't need none of that.
I just want the
30-day.
house.
So
I'll do it. I'll fix it.
As a seller, you want the easier.
The easier ones.
You don't want all this drama.
That's so funny to me, that he would have possibly. But when he said it was 2 other people, I didn't even think of
him a hug.
that. Like, I went into it like, okay, this is our house. I
Right.
wasn't even thinking like who else is bidding on it. No, I was like, babe, I want this house.
Well, I kept that from me because I knew there was multiple.
Yeah,
offers on the
I mean that's
property.
what y'all
I
do
knew it
though.
too. I just knew it because
I knew there was multiple offers on
That
the
house
property.
was, of all the houses we saw,
It was ready to go. It was
the one in
perfect.
Barrington Downs had potential, but even that had a little bit. It needed.
You need
Something
some
that
work.
you had
Get
to work
cosmetic
on.
right.
Yeah, you
Yeah.
have to
So
work.
that house
do
was there.
that.
It was already ready made. It needed nothing.
It was walking.
Now after we bought
Yeah,
it,
turnkey.
we saw a couple of things that the seller hid, which is cool.
It happens all
It
the time.
happened,
Still need to change that light over the shower.
Got a light over the shower. Don't work.
Yeah.
The men's closet doors off the
little
thing.
bit
and when
wonky.
Nah,
the
it looked
the
good
guest
then.
toilet has a wobble to it, but whatever.
Really minor though.
Probably
Yeah,
not.
right. It's minor. It's
Right.
minor. Yeah.
And see, before in a buyer's market, especially right after the crash. So when I joined when I became a real estate agent in 2011, sellers were giving their houses away. We could ask for everything.
Everything you
Your
wanted.
firstborn, a pint of blood to go with it.
The lambs.
Yes, you could, because there were so many sellers that were so underwater, they just wanted to hurry up and get
Get it
out.
right over here.
Yeah.
Not the
Closing
case.
costs.
People was still like
Warranties.
looking at our. He was like, "Nope, you got to fix this tub. It's not doing." He was on it. Like,
Right. He was like, oh
And it's
no, we
other
what we
people-
said.
Because
but-
that's my father and me. My
Right.
father
Other
would do the
people
same.
would be like, "Oh, I'll get that fixed."
Shit.
Right.
Or,
No.
I ain't
Picky
worried
back
about
then,
that.
though. You
Yeah.
could be, but you can't now.
You can't be as
Nah.
picky like that.
Can't be
So
picky now.
I'll be honest. I
Thank
just
God.
wrote
Dun, dun, dun,
I just
dun.
wrote 3 offers today for a couple of my buyers. We have not that we're not going to do it, but to make their house to make it look presentable. We on one of them, it was a $364,000 house, 364. We offered 384. No closing costs, no home warranty. We're going to do we are allowing to do an inspection, but we have waived our ability to ask for any repairs.
So it is just bare bones, whatever it is.
What now? Now, if there's major issue like a sewer problem, termites, oh no, we're coming back to that.
Right.
And one of my properties, we have some asbestos tile in there, so we're going back on that because that's a safety hazard.
Right.
But we're not having an appraisal. I mean, we didn't put the appraisal writer in the contract. And what an appraisal writer is when you write a contract is that's one of those contingencies that if it doesn't appraise for the price, the sale price that we put on there, we have the option of either trying to negotiate it with the seller or we can pull out. Us not putting it in means that we're not pulling out.
Whatever they want is what they get.
My buyers are really strong. Both of them just sold houses. They've got cash in the bank, so they know and they've got money that if it doesn't appraise and they still want the house, they've got money to cover it. Not a lot of people can do that.
Not a lot of people can make
and a
that
lot of
move.
people can't do that. So those are the ones that are ass out right now because they don't have that kind of financial stability to be able to waive those kind of things. But now we'll see what happens. But I mean
that
we're
comes
15
into-
over.
You know, when you give your numbers, you know what you're dealing with then.
Right.
And what's in the bank and what you got liquid and what you can and can't do.
That's all the stuff that we have to do.
Okay, I got two questions for you real quick. How long will it take to submit the bid, and how will you know you won the bid?
Now, I think they know 24 hours. They don't really give to. They don't really give you don't get a week. Most times when they like in open houses, they tell you open house Sunday, we gonna make our decision Tuesday.
Right.
So
They'll
it's not a long,
Long process at all.
48 hours maybe depending. I did an open house. It went live Thursday.
Yeah.
Like 20 offers on that Thursday. I mean, the day it went live.
Yeah.
And so I just kind of felt bad because everybody was coming in there wanting this house. And they was like, "Were any bids?" And you want to be like,
Hell yeah.
"Yeah,
Yeah.
20." I don't say the number.
I ask. I literally call and ask the agents. I'm like, hey, we looked at the house. Great. We love it. We're thinking about we're going to put an offer on it. How many offers do you have on it already? And I'll then, once knowing that, then I will tell my buyer and see if they want to put their ring in their hat in the ring.
Yeah, I knew before the open house.
Right.
It went
So-
live Thursday, open house Sunday.
But you see them, they come on the market like on a lot of what you see sellers are doing now though. You get on the market, you put it on the market Wednesday, Thursday, make it live on Friday. You've got all these, people
appointments
to show. So then you at least try to wait until Sunday, so enough people can see the property to see if they want it. Because if you don't do that, it can be it'll be gone within 24 hours.
And they trying to get the biggest bid.
And
anyway.
that sellers want,
They just trying to see how high somebody gonna go.
How high?
Okay, and real quick, with the process being what it is with the bidding war and everything, how has the pandemic changed the process currently?
I would think.
Yeah. It just made the process more stressful.
I think it's because so many people realize that if I'm gonna live with you, I need more space. Some people were smart and saved up their stimulus money or their whatever money. So there's more people. There's just more buyers out there looking for bigger places to be in there. So the change is it made the already low inventory that much lower. That much lower.
Staging comes into play too. Like I decorated the house similar to what we saw when we were there. Like that staging, I'm like, yeah, I can see living here. Okay, this it.
But
This
you
the
know
one.
what? They don't even.
Some people aren't even doing that.
Most
I
agents
still like
aren't
to
even
stage
doing
it.
pictures anymore because they're like, "What's the point? It's gonna sell in 2 or 3
Regardless.
days." So I'm not
Yeah.
finna waste my money.
Staging.
A
See,
and I
good
can't do
realtor
that.
is still right.
Yeah, I can't do that.
They'll
gotta
still
have
do
a
that.
Because one of the draws for me was the staging. Because
Right,
that house
and the
was, I'm like, whoa, the way it was set up.
Oh, yeah.
Right.
Yeah.
You walked in and you're
Yeah,
like,
that was
okay.
nice.
Yeah.
But that's the thing. Like the market
So when did you
changes. You
find
don't
out you
have to
didn't
do
have a
that
house when he
anymore.
was in your barber seat?
When he showed me, he was
cut
like, "This
my
is my
hair.
house." I'm all like, "Oh shit!" I was looking at that house, but I had showed him my house.
And
You know,
we
The house I was in
you
now.
know, we could
Yeah.
switch.
No,
No,
he good now.
I'm all right.
no, we good.
He did
I'm all
counseling.
right.
Look like he
good.
getting
I
over
mean,
it.
y'all
Right.
bitch. Did I wait?
I mean, he got more.
Still a little salty.
Yeah, he's
Still a little
still.
salty.
He needs the house he's in now. He has his daughters in the house, that 3-car garage, that bar in the basement, pool table that's finished in the basement. And don't your daddy live in the basement?
Yeah, it's
so yeah.
we
so
put
yeah.
another bedroom on there, so it's 2
yeah.
bedrooms downstairs.
So it worked perfectly.
Oh yeah, it worked out.
Yeah, so yeah.
He's still salty.
So we gonna do counseling on
Yeah,
the
I'm
next
still
show.
salty.
Yeah.
Very
We gonna
salty.
get counseling for these two on the next show.
You know.
We gonna-
Now,
have
so
a
now,
yard, you know what I'm saying?
so with once you get all that out the way and the offer is accepted, now
Go
what?
bring my dog.
How long to close on the house? And you know what? Now I don't even want to go there. I want y'all to talk about how fucked up
Yeah.
people. Let's get into the skinny of this shit.
I think
How fucked up do people because there was a situation where I was finna go buy some furniture, and Debbie was like, "No, don't you do not."
Oh my God.
He said, "Mario, don't do that."
Oh, I was
So
just-
please,
my ears
ladies,
are warm thinking
speak
about it.
on it. Speak on the real shit. How people fuck up the whole process by putting shit on their credit because they got it.
So during this process, you cannot
Repeat.
ruin your cannot.
Let's start
Ruin your
Hold on.
credit.
Here we go. Here we go. And now,
Breaking news.
to answer all the bullshit that y'all shouldn't do when your credit is good and you're trying to get a house. We have Gia Turner. Go ahead, Gia.
Yes.
During this closing process, do not go shopping. Nobody run your credit. None of that. No large lump sums of money in your
Large
credit. I mean, in
purchases.
your bank account.
Yeah,
You
if
can't
Pookie and them owe you $500, get
Don't
the
put it
$500, but
under
put
your
it in your
mattress.
mattress. You put it in your wallet, but do not put it in your bank. Here's the problem that people have: they run their credit. The lender gives them, oh, you're at a 700 credit score. They do your DTI, again, debt to income ratio. They're looking at your long-term debts versus your income and what comes out after that. And they also include your mortgage payment or what you're going to be paying on that. So if your DTI is 45% and that's the threshold, you can't change that. This is what that's what they pre-approved you for. People will go and they think, okay, now I'm going to buy, I got this house, I need new furniture, I need new this. And they start running their credit again. That is the biggest red flag that the underwriters will flag when they see, oh, you went to Weekends Only to get a
Home
credit
Depot,
card.
yeah.
Now maybe you didn't get anything, but you ran the
your
credit,
credit.
and maybe they gave you a credit limit of $3,000. Perfect. Well, now they have to
Add in
base
another
that
debt.
3,000.
Recalibrate it.
And now you might be over your debt to income ratio. I literally had a guy buy, and I quote, like 4 days before closing. And also on
4
another note,
days.
4 days before closing. And just so that you know, when you're in the process, it's usually about 30 days or so. I try to close a house within 30, 35 days. A week before you close, right before that loan commitment time, the lender's going to run your credit again. They want to make sure
You still there?
that you
Right.
that nothing has changed.
And job verification. So
Job verification is
don't-
big too.
Don't switch
Don't
jobs.
all right, do not quit your job. Do not
switch
wait
jobs.
until you close. Wait. But with that, he'd gotten some money from someplace. He put it in his bank. That was supposed to be his money for down payment. He spent $5,000 at the Gucci store.
Belt and one shoe.
And he said, well,
That's
my
all.
car, I was thinking about getting another car. So he went ahead and started the process to
finance the
buy
whole
a
other
car.
car? Oh,
Now, okay, we understand, the lenders will understand you have to have a car to survive.
But not today.
But, well, here's the thing. If you get a new car, why are you getting a car that's $300 more
than what
in
you had.
in your payment than what you had? So you had a 2006 Corolla, and you were paying, 100 and something or whatever. Maybe not 2006, maybe a little bit more than that. But then
2007.
But then you go and buy, a
Mercedes.
that's $500 more.
Now?
I have seen so
Did
many
you
of our
speak
people.
on the other day on the phone? Somebody bought a Porsche. Was that you that I talked to that said?
No, I haven't had a
Okay.
Porsche, but I've had the Mercedes. It was a Mercedes that the guy ended up buying, and we couldn't close. And he was messed up. He was mad at me, saying like I didn't tell him that.
Oh.
No, player. I know I told you that.
Right.
Because she know hers too. That's not,
Yo,
that's
player, I
stopping
know I
her,
told
too.
you.
Nigga.
Because
Yeah.
because at the end of the day, I work for you. And this is how I feed my family. This is
Yeah.
you're taking money. You're taking food literally out of my
Because
kid's mouth
if you
because
don't get
you're
the
a
house-
dumbass.
If she don't,
you
if
get
you
the house, you
don't
can't get
close, she
paid.
don't
And we
yeah.
don't get paid. I mean, but that's why as you see, I'm passionate about it because I want to make sure there's so many people that this is their first generation of home. Or maybe their grandparents had a home, but their parents didn't buy a home. Got so many people in their ear.
them what to do.
I want to be that person that's giving you the best and brightest and most valuable advice to get you to that next level.
Yeah, you were like, I'm gonna say a whole lot of terms that you don't understand. Don't worry about that. I worry about that.
Right.
I was
I'm going
like,
to tell you when you need to
that's
do
cool.
this, what time you need to be here, how much
great
money you need to
hands.
pay here, and I will do all the worrying for you.
See, I like that bottom line about it though. Like, you know what? Yeah, this is what we're paying you to do.
Right.
That's,
So go
that's
do
what
it.
we.
So she's
yeah.
basically
Yeah.
she was like our real estate lawyer because as
Yeah,
long as
'cause
we
she
had
knew.
questions, we would bounce stuff off her.
Yeah.
And shout out to Tom. That Tom man.
Tom Lubiowski, and
Man.
he's not with USA Mortgage now. He's
Right,
with
I know,
Neo
yeah,
Home.
yeah,
But
Neo
that's cool.
Home.
I've already done a couple
We
deals
got
with
his
them
magnet
since.
too.
Yeah. So shout out to Tom because first of all,
And yours.
I didn't know Tom from Adam, and I didn't know him from Adam, and we bonded and talked like we knew each other for years. And he broke everything down to me, especially when it came to my credit and getting things together and paying stuff off. He was also like a co lawyer to you
Right.
because I would come to you and Tom, and both of you guys stayed
We
on
say
me.
right.
Yeah,
I always say a real estate transaction is a three-way marriage. Don't worry about how freaky it sounds, but it is. It's a three-way
Bam,
marriage,
bam.
and there's trust.
Right.
We all have to be trusting in one another.
Poly theory. Okay.
So if you might be cool with me as your real estate agent, but if you are having problems with your lender and and you guys aren't getting along, it's just going to make the transaction that much worse. I've had problems, when I'm having a problem with the lender, they may not see it, the client, but I'm like, I never use this motherfucker again.
Right.
Because
Right.
I need you to be, we all need to be on the same page.
Yeah.
And I think I gave you two or three other people to talk to though. I just didn't give you Tom. Didn't I give you another person? But you clicked with Tom.
I clicked with Tom.
Right. I know.
So
I gave you
talked
one.
to another lady, and it was cool. I mean, we did business, but when it came to Tom, we were.
Tom was like, if you have a question, just call.
He gave me his personal.
Yeah.
number.
And it was like
everyone else was
9:30
just
at night,
everyone
you
else
had a
was. It was
What's
just
the
about.
office
It was
number?
office number. So every time that night, I'm calling him like, I got a question, and I would text Tom. He'd call me right back.
Right.
10:30,
And, and I know he has
11
those
o'clock,
two sets of twins and
Two
the
sets of
wife,
twins, right.
and he's a avid blues fan, so he's always watching the blues games or going to the blues games. So
Right.
I appreciate him taking time out of his busy day and schedule,
Yes.
to answer my question. And once we got things.
And he's from North County too.
Right.
So, you meet
Even though he went to
North County.
even though he went to Pattonville, but whatever, but whatever. But
has
anyway,
some emo.
but
Yes,
it was cool because I now have a bald headed brother. You know what I'm saying? We bond through the bald headedness and the beards. But with that being said, that's the end of our podcast. So today is episode 13. We had a great episode. Thank you, Debbie. Thank you, Gia.
Thank you for
Texas,
having us
Joe,
here.
Everybody.
April. Now, if you want to check us out on Facebook, check us out on Audio Audacity Podcast, on Instagram, IG, Audio_Audacity_podcast, YouTube, Audio Audacity Podcast. And also, I'm also posting the same video on the Old Freaks of Industry Podcast channel. So if you want to check us out through there, and whatever, you can listen to us on Google Podcasts, Apple Podcasts, Anchor Podcasts, Spotify, Spreaker, and anywhere podcasts can be heard. And in closing, if you have the gall to do it, we have the audacity to talk about it. And that is another episode in the can, y'all.
can.
Appreciate y'all. Catch y'all
All
next
right.
week.
Thank you. Thank you very much.
out.
All right.
Sounds like fast.
It does.